All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. This afternoon, no new triggers out there. And it was one of those days where I really like some setups very much. And they make for some good challenge trades. But the algorithm isn't triggering anything. So not going to go and make any trade right here. I thought Verizon was going to trigger, but it's had too big of a sell-off. It's actually moved too far, too fast for it, here today. And you'll notice Verizon after days like this, it doesn't normally trend. That's just it's not the norm for it to trend. Occasionally it does, but all too often you get a bad option, bad price, and it doesn't work out too well. We have some things like Triple D, which could trigger here today. It's not triggering just yet, but even if it does trigger, the options are horrid. This is one that I added to the watch list. I said I'll trade it when it signals, and the options are really good. Right now, there's nothing good about the options there with that. Bristol Myers, I thought, had a chance to trigger here today, and it's not sitting with a trigger here just yet. You can see it does have some 3-7 downside action starting to come in. In fact, the 3 just moved below the 7 here, but consolidation risk is still a little too high here with it. There's some interesting reversals on things like Netflix and on Nike, but we don't have downside crossovers to confirm any kind of trend, coming into play here. And then on the upsides, most of the stuff on the upside, it's pretty much just like an Alibaba, and there's a lot of this kind of stuff out there where, it has 3-7 across to the upside, but it's coming off of a really hefty low right here. And, the algorithm will tend to want to trade these after a higher low. That's generally where the probability is significantly higher. And, we see that with Facebook here today. We see that with FedEx and a Schlumberger, Las Vegas Sands, all kind of in that same ballpark here. So bottom line, no signal, so not going to go out and make a trade here with things. Now, remember last month, we talked about what the summer market environment would most likely be like, right? It would be one of chop, where we would have some overextension on the downside, and then we pop an overextension to the upside, and then we drop an overextension to the downside. Well, I still think we see a lot of that here this summer. I don't think that's going away, and it's one where, when you look at the market right now, it's overcooked. Right? It's overcooked in the short term. And one of those where, do you want to be a buyer on a day like today of the market as a whole? Not traditionally, not normally. Individual stuff, sure, fine. But when we look at the overall market, it's a little bit cooked here. And, one where I don't think we're going to see fund managers eager to step in and say, oh, well, hey, I want to buy this market for this, that, and the other. We could have some forced fund manager buying, and I think we saw some of that last week, them being forced to chase in and, have exposure. And I think we'll see another wave of that, here this summer. But it'd be nice to see the market cool off a little bit here. But it's also one where if it does cool off even a little bit, it's not going to take much to push it all the way back here to 280 on the SPY, before, making its next move there. So market vibes unchanged here today. We're not seeing a whole lot of improvement in it, but we're not seeing any deterioration in it. The bullish percent index has continued to kind of push on higher here, which does favor well for the bulls there and, for their arguments. But I had to chuckle, and let's see if it's still up there. I had to chuckle. It was a piece. All right, yeah, it's right on the front page of Market Watch. Full-scale bear market for stocks is among 3 scenarios Citi predicts amid trade tensions. Okay, all right. The headline caught my eye. Well, what are the 3 scenarios? Here's the 3 scenarios. Trade deal at the G20. Is that going to happen? No. But it says stocks soar along with emerging markets as the outlook for the global economy improves, and the S&P 500 jumps around 2,900. 10-year gold, dollar. Okay. So if there's a trade deal at the G20 between the U.S. and China, big boom, right? No trade deal nor Fed cut. Full-scale bear market. No trade deal, but Fed cuts rates 0.75%. Stocks hit new highs, but not all stocks and sectors will perform well. I mean, there are predictions and predictions and predictions, and it's one of those things where, okay, these are three possible scenarios, but you know what? There are multiple predictions that can be made about what the effect of no trade deal plus 0.75 percentage point rate cut would do. Right? We could argue that this would be a very bearish scenario, right? Especially when we look historically. But you know, they're arguing, okay, stocks new high, and so it's just one of those where you know we are in a market that's not unusual. That's very normal in terms of, hey, there are a lot of potential outcomes, a lot of different things that could happen. There are infinite number of variables. Are any one of these three situations going to emerge? Well, I would argue that no. I would argue what ultimately emerges is a mixture of these scenarios and a mixture of these results. And that is just, you know, what we tend to see during the summer. And, you know, it's one of those where you go, okay, what is the market priced in? The market's priced in a Fed cut, right? That's what the market priced in last week. Market hasn't priced in a trade deal with U.S. and China. Hasn't priced it in at all. It's one where last week that wasn't about that. Last week was about the Fed. And so, you know, there's significant upside to be had if a deal is made. And you think about the incentives, right? You know, if, at least here in the U.S., the U.S. president and the Fed, what's their incentive? Their incentives to drive the market higher. But they're also not sitting there going, we need to have huge gains, right? That's not the position they're in. They don't have to drive it 20% higher to make an argument. They just have to have it near highs. So they can play strong arm. They can, you know, kind of, you know, back off of things. They can, you know, they can kind of let the market cool off after its rallies and still be able to step in and drive and push it a little bit higher here and there. And, you know, it's one of those where they still have that, you know, that ultimate power here with it. You know, does it benefit U.S. President Trump to make a trade deal with China at the G20 conference, let the market fly for a month and a half, and then pull on back? No, not really, right? So if, you know, you can kind of keep the hardline rhetoric and let the markets kind of, you know, dance around the highs, well, you know, you have something there. You just keep them from flushing, and you have something where at any moment you can create, from a political standpoint, you can create, you know, a nice little bump. And I don't, you know, I know that's not been the norm for U.S. presidents in the past. But it's a different market, different president, different environment, and you know I'm not politically one way or the other, or you know I'm not in love with U.S. President Trump, or I don't hate him either. But you know there are a million different things that could happen. But when you look at the incentives and what is happening, the incentives are for the market to be driven higher. Now, that gets to be a very slippery slope when, you know, the economic data and the earnings are deteriorating and you have a market sitting near new highs. That gets to be a very, very slippery slope, and that is a definite danger out there. Okay, volume's pretty normal here for the day, for a Monday, and nothing too crazy on either side of the volumes, bullish or bearish. Just a pretty normal type of day. We do have the Justice Department essentially announcing that they're going to turn over some stuff to Congress on the whole, U.S. President Trump stuff with the Russia allegations and that drama, and that created a little little blip in the market here, but nothing too major. As it's normally that type of news normally good for 2 or 3 points, and it almost always goes back the other way. So if it sells off 2 to 3 points on that type of news, it almost always gets bought back up 2 to 3 points after the news. So we see that here in play today. All right. Now, so anyway, that's it there for the market, for the challenge. Not a lot of stuff I find to be overly compelling. I think there's some interesting, trade setups, something like a Nike put, right, with a stop on today's high, sets up with this type of candle here today. I'd prefer it be a little bit more volume on it, but a nice little setup there for a little bit of pullback. And there's a bunch of stuff that kind of, Nike-esque out there in the market today, and I'm sure if you just go through your watch list, you'll see a bunch of these pictures, and that's the trade. Is it a high probability trade? It's not one where it's up in the 80% area, not at all. It's one of those where it has a good risk reward. It doesn't have this outstanding probability of drop that would be nice to see. Okay. Now, this morning I alluded to the 7 key changes here at Trader Minute, here with the challenge, that I would talk about those. And these have not gone live here just yet, outside of this little landing page. There's still some edits that need to be done. So, there'll be a few, grammar and different types of things here with it. But I wanted to share these here with you as, these are going to be key things as we go forward here with the challenge. It's not just about what happened in May and what happens in June. It's about what the challenge is going to look like for the rest of the year, what it's going to look like the year after and the year after that. Okay. And, we've talked about a lot of these changes over the past couple months as, I've kind of geared everyone into, hey, you know what? This isn't just going to be about, hey, Jeff, what trade do you like today? It's going to be much more about something with the odds in our favor consistently, and, where we can expect, consistent performance over a long period of time. We don't take away a challenge's ability to go to zero, right? A challenge can always go to zero. The algorithm hasn't taken that away at all. And it also hasn't taken away at all. In fact, I think it's enhanced the ability to go to 100K. So just want to talk about each one of these and, make you aware of them if you aren't already. And that way you're aware of, what's going on and what's going to be happening going forward. And there are 7 key changes made to the challenge that allow it to be more consistent and customer friendly while keeping its upside explosiveness and surviving a string of unsuccessful trades. I think that's important, right? This isn't about, hey, every trade we make is going to work. It's about, can it survive a string of unsuccessful trades? Because different things will happen and go on. That's what the market is, all right? Key change number 1. All trade entries are based on algorithm signaled entry signals using a defined watch list. You've seen this. I may like what's going on in GM today for a trade one way or the other. I can't go trade it for the challenge. It's not on the watch list, right? I may like the setup on Nike. I can't go trade it for the challenge. It's on the watch list, but it doesn't have a signal, right? All trade entries are based on algorithm-signaled entries using that defined watch list. And there's a very good reason for it. Because over a 3-year testing period, there were 616 trade signals. The winners averaged an 8.4% gain. The losers averaged a 2.7% loss. These results are perfectly in line with that kind of 3-to-1 reward-to-risk ratio that the challenge is designed around. These magnitude of stocks moves, they provide plenty of gain potential for option application and a consistency of entry that is not based on headlines, news, opinion, chart patterns, or anything else other than that stock's probability to trend based on its recent price action. That's it. Right? This isn't about what so-and-so said on TV or, what the latest tweet was or anything like that. It is based on, it's based on price action where the stock probability to trend is high. The algorithm was built with a key concept in mind: survive the chops, thrive in the trends. That was the concept behind building this algorithm, and all the time put into it to, forward test it, back test it, tweak, change, and do everything else that was done with it. And that still behind the scenes goes on, right? This isn't a testing process that's done. It is a testing process that, continues. Now, I'm not tweaking the algorithm that's being run right now, and I won't, here tweak it for the challenge or anything like that. But as things go forward and markets change, the algorithm may need a little tweak here and there to be able to adjust. Key change number 2. All trades happen at either 10:30 a.m. Eastern or 2:30 p.m. Eastern. This means Trader Minute members can move on with their lives and their other trades. All trades are still done live on video with real money alerts that are sent via text, tweet, and email. Now, should have a little bit of an asterisk here because I do reserve the right to make a trade outside of these times for something unusual or something different. And I did that on Friday when we hit 10K. All right, for the challenge, I jumped on a little bit. It was an hour. It was an hour after the morning video, and sold the positions there. All right, I'm not going to jump on during a time when, on Friday, had I expected the positions to move in value tremendously, I wouldn't have jumped on. But they were things that okay, these aren't going to really go anywhere. And in fact, the prices of all of the two trades actually improved after I got out. So, it's one of those where I'm not trying to top pick or do anything silly like that with a trade exit. But those will only happen every once in a while. But this is a big change, and it was one of the more difficult changes to implement. But the way I looked at it and the way we looked at it here at Trader Minute was this is one of the most important changes to implement. As we know, most members have better things to do with their lives than sit around waiting to know if someone's going to make a trade. Hey, Jeff, I got this meeting. Are you planning to make a trade? Right? It's just one of those things. Jeff, are you planning to make a trade? Are you planning to make a trade? I totally understood. It's one of those where, members have their lives to live, right? But at the same time, I'm not even sure what trade I'm going to make, let alone what my plan on a trade to make is, right? So it created a little bit of it created a rift that needed to be fixed. And this was very difficult, applying the algorithm and finding the best times and, to run with for both the algorithm and for members. But this is what we have found works the best, and we are running with it. Okay. This also makes it so any trade exits, ahead of time, since they're defined what it's going to be. All right, you see the stock trading above its profit-taking price. On the next video, I'm going to get on and I'm going to trim it. I'm going to do something with it, right? If it's below its stop price, no, I'm not sitting there staring at it going, do I get out this moment? Do I get out? No, I'm waiting till the next video time. And then if it's below the stop price, I will jump out and get out of it. So makes it easy if you're following the trade and the trade spreadsheet to know what is going to happen. Okay. I've also been very clear about kind of what type of picture you need to see on the chart to get a trigger, right? And so you can get a pretty good feel and go, okay, you know what? This has a 3-7 cross. This has a Stoke 39-1. They're in this position, so, we might get a trigger, right? It's one of those where I don't even know for a certainty just from looking at it, but, it is one where you can get a pretty good feel for what could happen. Key change number 3. A defined exit system for each trade has been created. Call it the ATR method, and it allows for trades to ride strong trends while moving out when the trend stalls. The ATR method does not use support or resistance levels. It does not take into account arbitrary gain and loss numbers, doesn't use traditional technical indicators or price levels, Instead, the ATR method uses normalized movements in that specific stock to be able to hold trades that are trending outside their normal moves and exit trades that are just chopping in normal ranges. The ATR method also has time stops where trades are exited based on a time period where the odds of the trade working change. Right? The time stop isn't this arbitrary, 3-day, 5-day. No, this is happening because when we look at these stocks and we look at these signals that come in, or we look at where the odds start to wear off, where the odds start to deteriorate for the trade working, well, it's at these specific defined levels. And so, the ATR method takes that into account. The ATR method does a lot to ride the trend and move away from the chop, and has been proven to be successful. In the few challenge trades we've done here so far, and very successful in the in the testing that we've done for a number of years. Key change number 4. A defined watch list for the challenge is used. The current watch list consists of 60 stocks. Trades outside this watch list are not considered. The watch list stocks have been carefully chosen based on 3 factors. Number 1, the stock's performance with the trading algorithm. That's number 1, right? Do we have a stock whose performance is pretty good? There are some stocks that I'd love to trade and have good options. They just don't perform well with the trading algorithm. So not gonna use them. Number 2, the ability to apply options, right, to those trading signals. If options are not available, what's the point, right? We're trading options, so need to have signals where we can apply options. And then the liquidity of both the stock and the option. Some stocks have options, but they're not very liquid. And so for me to get in and other people to follow in and get out and other people to get, it just turns into kind of a nightmare. And so there are not stocks on the watch list that do not have kind of that consistent liquidity. There are some out there where sometimes the liquidity is there and sometimes it isn't. Triple D, for example. And I'll trade it when the liquidity is there. I won't trade it when the liquidity is not there. Key change number 5, options traded for the challenge have a 30 to 60-day expiration. This is a back-to-basics change made simply due to increased profitability of applying these options versus longer-term longer or shorter-term options. Most trades are going to average 7 to 10 days in length, but the ability to ride longer trades is built in. At-the-money options are chosen as they tend to have the best reward to risk ratio based on the expected stock moves from the trading algorithm. This combination of time and strike allows for the challenge to survive a streak of 3 to 4 losing trades in a row while being able to really capitalize on a 2 to 3 trade winning streak. And this is where, some of the survivability of a challenge has to be built in. Because while the algorithm has really good odds, when you take it over a large data set, and you look inside that data set, well, there are periods where, there are 3 trades in a row that don't work. There are 4 trades in a row that don't work. Can a challenge survive that period? The answer is absolutely no with shorter-term options. Can't. Challenge go to 0 very fast. Because while, yes, it moves through those strike prices, it moves through the stop level, right? By the time we apply that 8:30 or 10:30 and 2:30 time period, sometimes that option's gone from $1 down to 5 cents. It's not very survivable in that type of scenario. And so while, yes, any option has the risk of going to 0, that risk is severely cut with this expiration. And when you go back and you look at the successful challenges, when you go look at the blog challenge that I know many of you are familiar with and, traded along with me way back when, most of the successful trades, most of the successful periods of time, we were trading 30 to 60-day options, right? That's what we were trading. And, that's what is applied here to the algorithm. Key change number 6, decisions. Now, this one gets a little personal. right? In the past, the challenge has been based on my trade decisions, right? They could happen at any time of day and for any reason, which we already talked about. That creates a little bit of a problem that we have fixed. My trading day started to fill up with so many decisions based on news, analysts, where stock was going in the next little while, as some of the hyper scrutiny of each trade was felt. And just one of the things of having other people follow your trades, right, is everyone's, well, why? Why'd you get in? What drove you to get in? Because they think, well, you know what? If I understand why, well, then I can repeat it 100 times and get the same result. And in the market, that's not always the case. And in the way that I trade personally, right, I'll make a call trade for the exact same reason that I made a put trade the week prior, right? And there could be a lot of variance in my own personal trading, and that's the way I like to trade. That's the way I enjoy trading. But this had it came with a lot of baggage in terms of having to explain things. And then, you know what, if something changed and I popped on out, then it's, well, why did you change your mind? What changed? Blah, blah, blah. And it became more just talking about the stock and every little detail and micro scrutiny that just wasn't conducive to the trade working very well. Earlier in this challenge that we're doing right now, I was asked why the challenge would enter a call position on Under Armour, right? If we go and we look at the market here, SPY, this is one where what was the entry day on Under Armour? Let me grab that real quick. The entry day trade date on Under Armour was 6/3, right? That was the entry date on Under Armour. Sorry about that screen there. See if I can grab that back. But 6/3 was the entry date on Under Armour. And if we look at the market on 6/3, let's get a vertical line here. This is 6/3. This is what the market is on 6/3. Right? I mean, it was breaking below the 200-day moving average. It was bad news this and bad news that, and market's going down this and market's going down that, right? And I was asked, why would I make the trade when the market looks so bearish? Why would I buy the calls? What was my response? Well, my response was very easy. It was, hey, you know what? It wasn't my choice, right? It wasn't my choice. That was the stock that triggered. And I'm executing the trading algorithm that, has decidedly better odds, here to it. And it doesn't take into account where is the market, and just some of those arbitrary factors that, let's face it, when we look back in hindsight, when we have all the data, how much did the market really matter on some trades, right? How much did, a tweet really matter on some trades? Especially in trend. Well, it really didn't. So this leaves me really freed up to trade the algorithm, to jump on video, add some insight here and there to things, stuff that I'm watching, stuff that I'm familiar with, and add some trading ideas and a little bit of education on real-time action when it is appropriate. But I'm not a crystal ball. I don't wake up in the morning and go, well, I know what the market's going to do. The market's going to do this, blah, 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 blah. Right? That's not, that's not me. I don't have that ability, as many of you know. And so, this change here has taken a lot of decisions off of my plate. You'll notice with each of the trades, I show you the setup. But, I'm not sitting there breaking down the trade based on 6 different indicators and the fundamentals and the sales trends and, all that other stuff. I enjoy looking at all that stuff, and I do personally, but, it's not something that gets brought into the execution of a challenge trade. Key change number 7. And this is one that has a lot of sides to it. When Trader Minutes started, there was a chat room, and many of you listening to me now remember it. And I would spend about an hour each day answering questions, discussing things that happened in the market. It worked really well. I really enjoyed it. It was fun to do. I got to know some outstanding people, and it was very limited. But I made a mistake. I allowed the chat room to become my trading day. I was researching answers to questions on stocks I normally didn't follow, discussing topics outside my breadth of expertise. It felt I needed to have all the answers, so I was constantly in research mode. And there was a dramatic kind of correlation. And correlation isn't always causation, but there was a dramatic correlation between my community involvement and challenge success. And, it was one of those where I wanted to be able to say, hey, you know what? No, there's nothing there. That's ridiculous. And I could still make an argument that, no, there wasn't anything there. That's kind of ridiculous. But about a year ago, I ended the chat room. It was a really tough decision. But it's gone a long way to freeing me up. Allows me to kind of finalize this trading algorithm we're running with, provide more quality content, more kind of directed content, rather than, hey, where do you think this stock goes today? Or what do you think of this stock? And what do you think of that stock? That, I'm really not following. I'm really not paying close attention to. So, great. I pull up the chart. And, it was almost one of those, well, okay, here's the chart. The chart is the crystal ball. And so this chart looks like this. So what's it going to do? Which, is pretty ridiculous. And I allowed that to become, a little too much of the chat room. What we've done is we've stripped out past trainings and educations and put them into a video archive on a site that we launched earlier this year. Academy.traderminute.com. And the trainings are there. All of the trainings are there. And so when it comes to Trader Minute at this point and going forward, I'll do trainings. But I'll do trainings when there's something pertinent, real-time happening and going on. Not, hey, this is an option. This is a call. You buy a call when you think stock's going to go up. You buy a put when you think stock's going to go down. For two reasons. Number one, I don't want to do it. I've repeated myself over and over, over the years. I've already done it. And 90% of you out there, don't want to hear it again. Right? You've heard it a million times. And those of you that want to hear it, great. It's there. It's available and, can be accessed. So, it goes a long way to, make a Trader Minute about the challenge, about the consistency of the challenge and the success of the challenge over the long haul. And that's where my sole focus is. It's at the challenge, the success of the challenge and the success of the members that are here and part of the Trader Minute community, because ultimately that is what matters. And while I know each one of the automated challenges isn't going to make 100,000 and all of that, I do know that the recipe is here for something very consistent, for something very easy to follow, and something very, very easy to deliver for a long period of time. Now, this does have one caveat. This does have one issue with it. It can't handle a huge number of people following along. There has to be a cap. And that is something that in the past I fought against. But there has to be a cap, and a cap has been put into place. And, we are not at that cap there right now. But, when that cap is hit, it's going to be one of those where the challenges will have a waiting list. And, it just has to be that way to keep it successful, to keep it tradable and effective for the members that are with us here at Trader Minute. Thanks for hopping on. If you have any questions about it, shoot it over to me. Happy to help you out there. But you can see the link up here if you want to access that, traderminute.com, 7-key-changes. / if you want to go and access that. I'm not going to post the link at all here just yet, not at least till some of the things are edited, here with it. But anyway, okay. Thanks for hopping on. Thanks for being with us here at Trader Minute, and we'll talk to you tomorrow. Take care.